Hello fellow traders. Today is another mini videos where we cover things in the markets. Today we go over YOLO stock plays, high risk and high reward by Pajama Trader. The world of YOLO stock plays, where the motto is you only live once. This has fueled a risky investment trend. These plays are all about chasing the potential explosive gains, but at a significant cost. If you're new to the channel, consider subscribing for more Market Edge videos. Let's get ready to explore the thrill of exciting highs and devastating lows, and the questionable tactics that often surround YOLO stocks. What are YOLO stock plays? YOLO plays are more akin to gambling than transitional investing. Think of them as betting on companies with a slim chance of massive success. New IPOs, meme stocks fueled by viral popularity, or companies riding emerging trends like clean energy or biotech. The focus is less on companies' fundamentals and more on the possibility of a sudden surge in value. Highly speculative investments in companies with potential for rapid, massive price increases, often based on social media hype, news trends, or emerging industries, not driven by traditional financial analysis, can make you rich or crush your investment, sometimes within days. The good, potential for outsized returns. The allure of YOLO plays is undeniable. While most stocks offer moderate, gradual returns, YOLO plays target skyrocketing price movements. Success stories become legendary, fueling constant search for the next big thing and the intoxicating feeling of beating the system. The dream. Stories of YOLO plays turning small investments into fortunes. Example, GameStop, AMC. The appeal. The chance to outperform the market dramatically and achieve significant wealth quickly. The rush. The adrenaline of being part of something exciting and potentially life-changing. The bad. Extreme volatility and risk. For every YOLO win, there are dozens, if not hundreds, of losses. Prices can collapse as quickly as they rise. Most of these companies ultimately won't justify their inflated values. The investment is less about the company itself and more about riding the wave of the market sentiment. Harsh reality. Explosive potential also means crushing downsides with a very real potential for total loss. Unpredictability. Price swings are massive and difficult to time, easy to buy high and sell low. Weak fundamentals. Many YOLO target companies have new or unproven business models and questionable financials. The ugly. Market manipulation and scams. Unfortunately, YOLO plays attract some scammers due to the resilience on hype. Pump and dump schemes artificially inflate prices, only to sell and leave unaware investors with massive losses. Always be skeptical of overly promoted material and research the source of the information before getting caught up in the frenzy. Pump and dump schemes. YOLO stocks are favorites for manipulating prices to later profit at the expense of ordinary investors. Social media dangers. Insiders or influence may artificially inflate hype to benefit themselves. The aftermath. Investors are often left holding worthless shares when the hype inevitably fades. When to consider YOLO plays, if ever. YOLO plays are not for most investors. Think of the money you put in as lost the moment you buy. If you have any hesitation, this style is absolutely not for you. However, if you choose this path, research the company, even hype-driven stocks. Some are more likely to succeed than others. Absolute essentials. Extreme high risk tolerance. Must be willing to lose everything invested. Best as a tiny fraction of an otherwise diversified portfolio. Even speculation requires homework. Research is crucial to separate potential from outright scams. The YOLO success story, with the warning. It's important to acknowledge that big wins sometimes happen with YOLO plays. This fuels the hope, making them so tempting. However, stress that most of these stories ended with investors who held too long, losing a lot. Waiting for the next big one becomes a trap for many. Success exists. Highlight a famous YOLO win, like GameStop, where early investors did make significant profits. But it's the exception. Emphasize the rarity of such wins, and that most were lucky with the timing, not the stock picking skill. The danger of the chase. Waiting for the next GameStop keeps many investors stuck in YOLO plays with continuous losses. Less hype, more potential. Introduce these options. For risk-tolerant investors seeking big rewards, there are ways to do it that involve a bit more strategy than pure YOLO. Growth stocks offer the exposure to innovative companies. Penny stocks offer the chance to get in on the ground floor. And options provide the tools to potentially amplify gains and losses. Research is absolutely vital for any of these. Growth stocks, established companies in fast-growing industries. Penny stocks, shares of tiny companies with potential for significant growth, but also high risk. Options trading, advanced strategies, allowing leverage for big potential gains, but also complex. Building a responsible portfolio. We emphasize that YOLO should be a sliver of a healthy portfolio, not the core. Most of your money should be invested for the long term in reliable assets. If you crave the thrill of a speculation play, define a tiny space for it and stick to your limits. Foundation first. The play section. A tiny portion of your portfolio can be dedicated to riskier investments, including, if desired, YOLO plays. Setting limits. Decide in advance a percentage limit. Example, no more than 5% of a portfolio on risky plays. Index funds. Provide diversification and market average returns. Blue chip stocks. Solid, established companies for reliability. Now, I've identified several intriguing companies with the potential for significant developments next week. And I'm looking forward to sharing their charts and analysis with you. They are Marathon Digital, ticker symbol MARA, Paramount Global, ticker symbol PARA, Carnival Cruise Lines, ticker symbol CCL, and QuantumScape, ticker symbol QS. Profit charting of Marathon Digital, ticker symbol MARA. I'm bullish on this one due to the next halving event with Bitcoin. I would ask you to look up the halving event for more information. But back to the chart. The average volume was about 57 million. The high volume was 140 million, taking it to the $27 area. This sold off in the $27 area as well, with about 213 million in volume. With continued volume, this should get to the 27 area. If it declines in volume, this could rebound down in 21. Profit charting of Paramount Global, ticker symbol PARA. Paramount Global is another one I'm bullish on, despite them looking for a buyer. This average volume is about 12 million. The high volume was 49 million at 15. It sold off with 12 million in volume at the 30 area. If this gets more than the average volume, along with a couple days of average volume, this can get to 17 or better. But if the volume fades, this could rebound in the 10 area. Profit charting of Carnival Cruise Lines, ticker symbol CCL. Although the weather's getting warmer in most parts, consumer spending is slowing down. Dollar stores are closing, so I don't see many people gravitating to high-priced cruises. That said, I'm bearish. This trades at an average volume of 59 million. The high volume took this to about the $17 area, with 60 million in volume. It sold off for 60 million in volume in the $17 area as well. If the volume keeps moving south, this should recover in the $8 area. If this gets a jolt in volume, this has a $5 to $10 move left to the upside. Profit charting of QuantumScape, ticker symbol QS. Seeing weakness in NVIDIA, I'm thinking the chip industry is not dead, but recharging. With lower chips and chip makers. Now this has an average volume of 6.2 million. The high volume of 54 million took this to $13. This also sold off at $13 with 11 million in volume. With lower volume, this could fade to 5 before recovering. A boost in volume could push this to $13 or better. In conclusion, YOLO or no? YOLO is exciting, but rarely successful. Sustainable wealth is built through solid investing, not chasing viral stocks. If you truly can't resist the allure, minimize the damage it can do. Ultimately, the choice is yours, and choose that wisely. The question: is the thrill of potential massive gains worth near certainty of repeated losses? Responsible investing. Focus on sustainable wealth building through diversified long-term strategies. If you must play, do so with money you fully accept losing, using strict limits. Share this video with others that may find value in it and are looking to change their trading game. And give this video a like if you found value in it. Thanks again for watching.